Who do we have walking in here? Thank you very much for joining us, ladies and gentlemen. Should we start the music over again? Why don't we do that intro one more time since he just walked in? Because I understand when things happen in traffic, but I get a hard time. We're not going to do that to him. So do we want to start the intro? Can we do it again? Let's start the intro again and give him a do-over. Not too often in life we get a do-over, but today you're going to get a do-over. Let's do it. Hey. All right.
Good morning, South Florida. Hello, world. This is Robert Henderson Jr. live in the beautiful studios of WZAB 880 The Biz. Joining me live here, sitting in my seat, or she had to get out of my seat.
I had to get out your seat.
Boy, I tell you, women rule the world. Not today, baby, not today. I'm here, rise and shine. Traffic don't stop me. I had to get out of my car and fly here.
I see, and you made it.
Yeah, just taking off my cape. How you doing,
Welcome.
Lynda?
I am fantastic. How are you doing, Robert?
Excellent. Got a wonderful show lined up for you. Boy, I tell you, it's been some kind of week. Mm-hmm. Have you been looking at that stock market? Man, I tell you, it's been whipsaw, right?
Yeah, I'm getting whiplash from the up, down, the back, forth, and feast, famine, hot, cold, high, low, all of those contradictions, but such is the animal, correct? That's the way it goes.
Well, I always say the stock market is like an elusive lady. You know what I mean? Difficult to catch, understand. I mean, just very elusive. Never know.
But you desire it. You want it.
Yeah. Well,
yeah. You need it in your portfolio. You need it. You desire it.
Well, you need the growth. You need it. You
need it.
As a matter of fact, I'm going to give them metaphors on the difference between the stocks and bonds.
Okay.
Because this week, we had a real big dip in the stock market. One day it just dropped 800 points.
Okay.
And the talking heads on CNBC or the newspaper, they really talk over people's head. They don't put it in plain English, like what really happened. Mm-hmm. So today I'm going to elucidate. Remember that? That was one of our words.
Remember that. I like that.
Elucidate.
One of my favorites.
I'm going to at least elucidate. Those of y'all who haven't been listening to our show all year, we've been giving out vocabulary words every Saturday at 8:15. Elucidate means to explain, basically. So I'm going to elucidate what happened earlier this week, why the market dropped 800 points, and it had a lot to do with bonds and the recession. So we're going to talk a little bit about. We're going to devote the whole show talking about stocks, and then we're going to also talk about bonds and how bonds really rule the world. Bonds really is a indicator of what's happening, what's going on right now, and forecast what to be. So we're going to talk about that, and make sure you got your pencil and your pad out. Especially really started at 8:15. Okay.
Let's do it.
But have you been noticing, man, how this thing has just been up and down? I mean, yesterday it closed at 300 points up, but we don't really know what's going to happen. Next Friday, the Fed chairman is meeting in Wyoming, and he's going to come out and make a statement. The last time he made a statement, he cut interest rates, which hadn't been cut in 10 years, Lynda.
Well, he's got a difficult job given 45 being in the office, because it's supposed to be a separate body, the Feds and the White House, but this particular White House is injecting itself in Fed policy and almost threatening the man's job. Thank goodness he can't fire him. And a lot of people say words matter, and with this White House, with the sanctions and the tariffs, and it's causing, things to go up and down. And he's really, I tell you, it's all we can do is ride it out, ask how you can benefit from it. There's profit in every disaster, every situation. I don't mean to sound cruel. I'm just a messenger. There's profit in disasters and hurricanes and even in this situation, as he makes statements that cause the market to drop, what do? Do you buy? It's on sale. So there's profit in everything. We just have to ride it out, find the good in it. And I know that may not sound like what people want to hear, but ride it out and make the best of it. We can't change it.
No, and people ask me, how do I deal with why I'm so calm about it? Because, Lynda, I'll be 61 years old next month, and I've been in the markets for over 35 years.
Okay. You've seen it all.
I've seen it all. I've seen the ups and downs, the different presidencies, the different Fed chairmen, way back in, Paul Volcker.
Okay.
I mean, so this too shall pass.
Right.
You know,
Absolutely.
And even about the elections and Trump getting another, 4 years, and the Democrats and Republicans. You know, when you really look at it, they're all the same. I'm letting you know that. They're all the same. It's a good Netflix document that's on right now called The Family.
Okay.
You got to check that out.
I have to.
It really is. Organization, they're cross-party lines. And their motto is, let's be invisible.
Gotcha.
Let's be invisible.
Gotcha.
Let's be invisible. Isn't that
Okay.
something?
Okay,
and
that
it
is.
cross-party lines.
Okay.
And it's all over the world. It's bigger than the mafia.
Okay.
But
okay.
it's shaping the world, which way the world is going to go.
Mm-hmm.
And you'll be surprised the kind of people that are involved in it.
Okay.
So when it comes to, down to everything, it's about haves and have-nots. You notice how the CEO pay is just, almost 1,000 times more over the last 40 years
Absolutely.
than the regular, working stiff pay.
Mm-hmm.
And the rich are getting richer and the poor is getting poorer. And they got us playing, and they got the average person, talking, complaining about or battling about black, who's white, this race thing.
Yeah.
And then they have us also with, if you're Spanish or if you're American
Yeah.
or not American,
Yeah.
while they making the money.
Yeah. Meanwhile, they are invisible
Right.
and dictating policy, global policy,
Right.
and creating generational wealth.
Right. So
on our watch.
And you have a lot of people who are, just down in the trenches in terms of, this is not right, and I am woman, I am gay, or I'm black, or I'm Spanish, or I'm Jew, whatever. Let me tell you something. That's all window dressing. It's all about power and economic and survival. And if you get too banged up and caught up in that, you can't take that to the grocery store. You have to survive. You have to take care of your family. Now, I'm not saying that you don't stand for something.
Okay.
You do stand for something.
Right.
You
right.
do. You
Right.
do.
I got you.
But you don't wild out until you can't perform and you can't
You're
create.
not focused.
Right.
Right.
You
right.
can't create.
Right. I got
Because
you.
you got to have something. You have to have some power. You have to have some influence. That's what this whole family is about when you watch that documentary. I'm not trying to big up Netflix, but it was a good documentary.
Okay.
I think it was like five parts to it. It's like a
Okay.
mini series. But I encourage people to look at, because, Lynda, there's a lot of invisible organizations that are going on. It's not just the fraternities, the sororities. It's not just the Masons. These are ones that It's not just, all of these BNIs and all these other, Skull and Bones and all that, Cross and Bones. It's not just that. You'll be surprised how many invisible organizations that are functioning, and why this person got this deal and you didn't get this deal and you was qualified. You will absolutely be astounded to find out how many invisible organizations there are on the planet.
I am getting a little taste of it in my development endeavors, but you're right. It's everybody knows everybody, and they take turns, and you get the deal this time. And how dare you try to come in and infiltrate and haven't been vetted, and we don't know you, and yeah.
And it's in every field.
It's in every field.
It's in every field.
It really is.
It's in every field that has to do with production, performance. It's definitely in the movie industry. You can tell it's in, because you can tell it's in the entertainment industry.
But as you're talking here, and I'm not saying you're wrong, but it's depressing. What's a person to do as you get up every day?
Well, why do you say it's depressing?
It almost is like, okay, if it's not an even playing field, if I'm not part of the clique or the invisible group, why do I get up every morning grinding and thinking I have a chance? Keep hope alive. You might as well throw that out the window, because from and I'm not saying you're wrong, but that's why you just have to just stay strong. Because boy,
why
I
do
tell
you say
you,
it's depressing?
Because I have hope, but the facts dictate that that's not going to be enough.
But Lynda, why would you be depressed when you know how it's played? Listen, this is what I'm trying to say.
Okay, all right.
Why would you be depressed when you can do something about it? You can get involved. You can know someone. You can find out. You could. It's like, even the scripture says, you got to ask, seek, and knock. You can't sit there and think someone's going to take care of you, and we in, la la land of milk and honey. No,
so
things
what do
are
we
happening.
tell the person that said that ask, seek, and knock? I guess the bottom line is keep trying, and you keep going up against a brick wall, and you think it's an even playing field, and you go in there and you got the credentials, and you got all of the references, and you got the degrees, and you got the land, and you got all this, and yes sir, here you go, and can I get a meeting, sir? And you get nothing.
Well, that's fairy tale. See, that's not thinking. See, that's someone who. When you have a goal, when you have a desire, when you're working toward something, you will quickly find out how the game is played.
Yes, you will.
Okay, now if you're not, if you're just in la la land, you're just saying, okay, you're gonna do what they tell you to do. You're not really in control. Your life is basically by circumstances. You know, this happened because of this. I'm like this because of my mama, my daddy, or whatever. And you're just saying, hey, whatever comes to me, but you're not focused. You're not driven on a worthy goal. Anyone who are focused on trying to, I would say, achieve a worthy goal, you will quickly find out who's the players, what's going on. Oh, I see how they playing.
It's inevitable.
That's right.
Whether it knock you upside the head,
That's right.
or you stumble upon it, but you will find out.
No, that's right.
The more you knock and
that's
try to
right.
kick that door open, you will find out.
If you're paying attention,
If you're paying attention,
if you went to drama school and you graduated and you got a master's degree in drama, and now you're trying to get parts, you're gonna find out why is this person who's not better than you getting parts. That's because of her daddy, her uncle, her relationship. She used to work here, her sister worked there, and you're gonna find out relationships. You follow me? So when you say it's depressing, life is about learning about these invisible organizations, these invisible contacts.
or creating your own,
Yeah.
finding a way to create your own, grow your own demographic, grow your own invisible
But let me-
club, and just no means not right now, and taking it.
But you know, also when you say creating and finding your own, let me tell you something. If you work on you, trying to be the best you can be and become a superstar, that invisible organization will come find you.
You are so right. You are so
I
right.
promise
The
you. You know-
calls will start
That's
coming
right.
in and go, how do they know me?
That's right.
Yeah.
They will come find you
Yeah.
because that's the way the universe works. I mean, that's the way the system works.
Yeah.
It combs and is always scouting and looking for
They can't
the
ignore
next.
you.
No.
They will call.
As a matter
They
of
will
fact-
find you.
As a matter of fact, it's a book called So Good They Can't Ignore You.
Gotcha.
Can you believe that?
Gotcha.
There is a book
That
that I
is
read.
so true.
That's right. Your goal, listen to me, Radio Land, people that are listening, if you're on YouTube, your goal is to be accountable to yourself, your family. Your goal, whatever you're doing, if you're a janitor, if you're a school teacher, if you're an athlete, if you're a musician, if you're a business person, whatever, you're a scientist, whatever you are, you have to focus. You have to try to be so good. And if you become so good, I promise you, they can't ignore you. It's like having a red rose in the midst of weeds. When a reaper comes, the reaper will pick all of those weeds out, and he will take that rose and pluck it away. You following? You can't not be notable.
Right.
When you're achieving, why do you think that they give special attention to the people who are good or the people who have achieved? As a matter of fact, this whole special that I was telling you about on Netflix called The Family, when you are powerful, that's when they achieve you. If you're nothing, so if they consider you nothing, that you're just you want to be average, they don't bother with you because you can't help, you can't influence. Isn't that amazing?
That is. So now it goes back to.
We got to take this station break.
All right, let's do it, because
We're back live. Robert Henderson Jr., certified financial planner, certified tax coach, and live in the beautiful studios of WZAB 880 The Biz. Joining me here is my co-host, sister-in-law, Lynda V. Harris. She's the vice president of the Henderson Financial Group.
Thank you very much. So, what you were just saying before the break, some people will take it as encouragement, as it should be, but based on what you said, if you rise to the top like cream, if you are exceptional, if you are extraordinary, they will find you. You will get the call. You will get the call back. You will get the interview. You will be invited to the party, to the table, to the deal.
Well, let me clear that. In other words, when you're on the road to achieving, people will come in your path to help you, whatever you want to accomplish. That is precise. I mean, that is guaranteed.
Absolutely.
As a matter of fact. When you are seeking, asking, searching. Now, the way the law works is you could be seeking and asking for trouble. Trouble will find you. You will get just what you're looking for. You follow me? And the reason why the law works so like that's precise and perfect is because you become what you think. When you set a goal and you're trying to get something, it will, whether it's good or bad, the people will show up. In other words, let's say you're a bank robber and you need a car, you need somebody to open a safe. You will find somebody know a safe cracker. I mean, it might be an undercover guy, but but you're gonna get it. All right. If you whatever you're trying to do, if you're trying to develop, if you want to go into the sports arena, I mean, as you search and grind and talk and peel back the onion or the banana, whatever you want to do, you will, come and you will meet the right person. But you have to stick to it. But it will happen. It's a journey, and then you can tell your story how you got to the top as you get your award and have the mic in your hand.
Now, your words are powerful. Careful, because this is a financial show, and I can hear people out there saying, well, I want money. I want financial security. I want wealth. I want passive income. And Robert, you said, if I stick to it and if I every day think about it and if I'm about my business, it will come.
No, let me
stand by that.
Let me clear that now. Thoughts have to be followed by actions.
Absolutely.
You just can't think you're Superman. You just can't think you can fly.
You can pick up that 300-pound weight. You got to train.
That's right. All thoughts got to be followed by actions in order to them to become a fruition. You have to be proactive. You got to do something. You can't pimp the universe. It's not no genie. You don't have a genie saying, "Genie, give me this, give me that."
Right.
You got to do something. I mean, you got to train. You got to work. You got to read.
Absolutely.
It's something for you to do. I mean, this is a partnership. You in partnering with the universe. Now, if you don't understand this, then I can't spend a lot of time with you.
What was that saying you were saying?
That's right.
I ain't got no time for you.
If you don't understand what I'm saying, I can't spend a lot of time with you.
Can't spend a lot of time.
It ain't your time yet. Maybe your next life. But in this life, I can't spend a lot of time with you. If you don't know that you need more, if you don't know that you need some help, if you don't have an itch, a desire that says, I know it's out there, and I'm gonna find it. And I'm gonna find the person or the people or someone that can help me get there. And I know when I hear, it's like a dog whistle. Because I can look at them and tell them, I can look at them, how they talk, how they walk, and they're demonstrating that they know what they're talking about.
Gotcha.
All right. So now let's go into, first of all, let's finish, when I was saying how the stock market is elusive, let's define what is elusive. Elusive is a word, like I said, that, first of all, let's spell it. It's ELUSIVE. 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 You ever heard that, the elusive lady?
Oh, yes.
Well, the markets can be very elusive. You can't really tame them. You don't know what they're going to do. They turn on a dime, very sensitive, hard to catch, difficult to figure out. You think she like you, but then she don't call you back. So you think the stock market is going to keep going up, and then it drops.
Right.
All right. Metaphorically, Lynda, okay, those of y'all listen to me, when I speak, I use a lot of parables because pictures mean a lot to me.
Okay.
I think pictures are worth 1,000 words.
Okay.
So when I look at the stock market, I look at the stock market as children, small children. The reason why I say children, small children, because think about minors. Think about a 2-year-old, a 3-year-old, a 4-year-old. They can turn left, right. They do stuff. They don't mean no harm. They're innocent. But one thing you know about them, or you hope some of them, most of them, they will grow up.
Yes.
To be adults.
Yes.
You got that?
Yeah.
'Cause
Productive adults.
Hopefully.
Hopefully.
Some of them make it.
Right.
Now, we're gonna use this metaphor interchangeable with stocks.
Okay.
Some of the stocks, i.e. children, make it.
Yeah.
Some of them wind up in jail. Some of the stocks go out of business.
tank?
Children.
Right.
Okay.
I got
so
you.
use it interchangeable.
Gotcha.
So the stock market remind me of children. Now, we do know that the Dow Jones Industrial Average, a little child, when President Barack Obama took office, when we had this recession and it was under depression, it was, I would say, in 2008,
Okay.
the Dow Jones Industrial Average was at 6,000.
Okay.
Okay, so right now, it's over 25,000.
Okay.
So that's like a little child was 6 years old. Now, the little child now is 25.
Okay.
You see how I'm making the connection?
6,000 to 25,000.
Right.
Absolutely.
The Dow Jones in 2008 was 6,000. That was, excuse me, it was, the Dow Jones was 6,000. Okay, that was the points. That was the numbers.
Gotcha.
Right now, the Dow Jones Industrial Average is over 20. Let me see exactly. The Dow Jones Industrial Average closed yesterday at 25,886.
Okay.
But in 2008, it was 6,000.
Okay.
So liken that to in 2008, let's say it was a child. You got me?
Gotcha.
And now you're looking,
Gotcha.
you ain't seen the child,
Gotcha.
your nephew, and a neighbor or whatever you haven't seen and went to college. He's 25 years old.
Gotcha.
Now, that was elusive. Now, you don't know what he done went through.
Right.
Or she done went
Right.
through to get from that age 6 to 25.
Right. You don't know the in between.
That's right.
Gotcha.
You don't know the in-betweens. You don't know if they got in trouble.
Right.
You don't know. It just didn't go straight up.
Right.
Life wasn't just smooth for them. That's why the stock market remind me of children. The whole not predictable, unpredictable
Good day, bad day.
child.
Yeah.
And have different kind of children, right?
Yeah,
You have some
absolutely.
children, you say, man, that's an old school child.
Yeah. Yeah.
You have some, boy, I tell you, if you don't watch it, they'll walk right into and jump in the pool. Not even jump in the pool. They're 2 years old, 3 years old. They go right and you got to watch them.
In the deep end.
In the deep end.
Right.
And some of them, like, they look at that water, they ain't going nowhere near.
Absolutely.
Those are characteristics of companies also.
Okay.
You have some of the McDonald's. You have some of the new issues. The stocks that are just, you don't know if they're going to be around. They're not Coca-Cola. You follow me?
Gotcha.
It's been around. So
Gotcha.
stocks really remind me of children.
Okay.
Now, bonds.
Okay.
Bonds remind me of children that have now grown up. They old. They old.
Not moving as fast.
Right.
Predictable.
Slow a little bit.
Slow a little bit. Yeah.
Not as,
Yeah.
Well, they should have matured because usually they go from stocks, which is growing your money. Growing your money. So you use stocks and mutual funds and ETF to grow your money. You take risk.
Right.
Because little kids take risks. They fall down, scrape their knees,
Absolutely.
don't they?
Absolutely.
And some people, they don't think that stocks should fall. They don't think little kids should fall down and scrape their leg, get into a fight, you know what I mean?
Right,
Misbehave.
right,
A lot
right.
of times they misbehave, and stock's not acting right. You like, he's just a child.
Right.
Don't be so hard on her.
Right.
She gonna be okay.
Right.
You know what I mean?
Growing pains.
Growing pains. So the market is like that. Now, do I think the stocks right now, the Dow Jones Industrial Average today is 25,886? Do I think 10 years from now it's going to be higher? Yes, I do.
Okay.
You know why I know?
Why
Because
you-
I know the child grew up.
All right.
Now, can you stop the child from growing up?
No.
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 No. No.
You cannot.
No, you can't.
Okay.
Now,
Good point.
good point, right? You see
Very
that,
good
right?
point.
But now, some people say, I don't want to have no children because it's just too much headache.
Yeah.
In other words, I don't want to be in that stock market because it's
Right.
just too much headache.
Right.
Now, I know they're going to grow up.
Right.
I know they're infant now.
Right.
But boy, it costs a lot of money.
I don't want the drama in between.
That's right. Can't
I
go
don't want
nowhere.
the unpredictability.
Can't
I
go
don't
out.
want- Right.
In the way of your man.
Right. Exactly. And that's just not for me. I don't want to have children. It's just too much.
So I'm glad you said that.
Okay.
So that right there, it tells you you're not a bad person just because
Right.
you don't want to have children.
Exactly.
I.e., because you don't want to deal with the stock market.
Absolutely.
And all the ups and the downs and the headaches, right?
Just know yourself.
Just know yourself. I think that was a good metaphor.
I think so too.
You think the people got that?
I certainly do. We should open up the lines and see.
Okay, but no, I got to go to bonds
All
first.
right, let's go to bonds.
Okay,
All
so
right.
bonds reminds me of people that are, I would say, 50s, old 60s, 70s, 80s.
Okay. Oh my
Bonds
goodness.
supposed to be stability, stable. As a matter of fact, there's a saying out there in the securities world that rich people buy bonds.
People that have accumulated. Okay.
Oprah will buy bonds.
They don't want that up and down childish behavior.
They want to keep what they have.
Predictability.
That's right.
Okay.
They want that slow, steady growth.
Slow but sure.
Right. So what does the bond do? We know stocks are always trying to achieve. Little kids trying to grow up and reach high, act grown. We know that.
Right,
You know,
right.
misbehave. You know,
Right.
some of them, you know, good students. Some of them, you know, get in trouble, juvenile, you know.
Right.
Run away. I mean, we know stocks can be. You just got to get a good child. Hopefully you get a good one.
Right.
Hopefully you get a good stock, a good mutual fund, you know. But you can't really tell. But they also say who their parents are. And the parents would be who is the advisor
Gotcha.
of the child, or who is the fund manager. You got it? You make the correlation?
Gotcha,
Okay.
gotcha.
All right, so the bonds now, first of all, let's tell you what a bond does. We know that stocks and children, they want to grow and get tall and grow up. Bonds are really lending. It's an IOU. Bonds, for rich people that have, or countries that have bonds, that buy bonds, they want to put their money somewhere where it's safe.
Okay.
They're not looking at doubling their money. They want to get, 3%, 4%, 5% interest off their money.
Okay.
It's for wealth building.
Okay.
Wealth, I would say wealth security.
Right.
You know?
Sustainability.
That's right.
Yeah.
And when you think about it, as you get old, you shouldn't be out there playing flag
Absolutely.
football when you're 80
Absolutely.
years old. You
That's
know what I mean?
right.
I mean, you can't fall down like when you was young, because this time if you're old and you're in the stock market, you fall down, you may break a hip.
You're not going to bounce back.
It's how the recovery takes a little long.
That's right.
So maybe you should be in something stable. Now, the category like bonds, and bonds, like I say, give you stability. At least you know what you have. That's why they have U.S. savings bonds.
Okay.
They have corporate securities bonds.
Okay.
They
Municipal
have
bonds.
municipal bonds. So if you want to lend money.
Absolutely.
And then they have U.S. government treasury bonds.
Absolutely.
And notes. Now, bonds are lending. In other words, when you buy a bond, you are lending your money to an institution or the government. That's what you're doing. You're lending your money. Because you have so much money now, you want to lend it out.
Right.
Now, you could lend it out to someone who's strong, or if you lend it out to your drunk uncle, it's not secure.
Right.
It's called a junk bond.
Right.
Because it's risky. He might not pay you back. You follow me? So bonds are for getting rates of return, interest, dividends. That's what bonds are used for.
And it's predictable. You know what you're going to get. So don't think you're going to get more
Right.
than what they told you.
Right.
That's it.
Right. But at least you know that
least you know.
At least you know it's not going to be elusive like the stock market.
Absolutely.
It ain't going to go down 800
Absolutely.
points or
Absolutely.
500 or 1,000 points because somebody sent a tweet.
You
Follow
got
me?
it.
So bonds are in the same, when you want to put your money in the category where you want to not be too aggressive, you just want to make sure it's there, you have the CDs. Same kind. See, when you buy a CD, what you're actually doing is you're lending your money to the bank. And the bank is paying you a little bit of interest. but they're giving you the comfort of safety.
Yes.
So
There's
that's a
cost
CD.
to-
That's
yeah.
right. That's a CD.
Okay.
Annuities are the same way. Fixed guaranteed principal annuities the same way.
Safety.
Safety.
Yes.
You ain't gonna lose your money. You can't lose a penny in a fixed guaranteed annuity.
Okay.
Especially the ones that don't have those costs for riders. It's good. It's safe.
Okay.
It's for legacy building. It's in the same RAM sort of as bonds. But
Okay.
annuities are a little safer than bonds.
Okay.
Because next to God, insurance companies have the most money. I want to say that again. Y'all think banks have money? No. That's invisible. Next to God, listen to me. Next to God, who has everything.
Yes.
The next up is insurance companies. I want y'all to understand
Yeah.
that.
Okay.
Think about it. How many? Look to your neighbor. Look to your right. When the last time you heard your friend's house burnt down? They burn down every year.
No.
Every year you got to pay that homeowners insurance.
That's why it make the news. It's an unusual event.
That's right.
Yeah.
That's right.
Yeah.
Look at auto insurance.
Yeah.
How many times?
I've never had to
See?
file a claim.
Isn't that something?
Ever
Oh, that's
have
something?
I used my insurance.
And every
filed a
year you
claim.
get-
and I pay every
every
month
year.
since I was
That's
15,
every year.
16.
Every me,
Yeah.
yeah. Yeah, me too.
Just afraid not to have it.
It's like if you don't use it, you lose it.
Yeah.
That's why they have, and they don't even think about the medical.
Oh my goodness. Don't even talk to me about that
Oh
right
my
now.
goodness.
I've been there.
Oh my God, they make so much money. Then they have a nerve. So many people have this accidental death insurance. What a ripoff.
What a ripoff.
I think you should have, if you got an accidental death insurance, they only gonna pay you. You dead now.
You dead.
But it got to be an accident. No.
Well, what if the accident don't kill you and you die from the injury from the accident a month later?
You don't get paid.
That ain't right.
And that's something.
That's awful.
And
that's what people don't understand.
They don't understand. But that's let me see, that accidental death insurance, the
Yeah.
that is a money maker for the insurance company.
Yeah.
People just die in their sleep.
Dismemberment and
All
just
that.
all kind
You
of.
die in your sleep, been playing. Holly, just in case you get in an accident.
Right.
In case you get in an accident, but Uncle Willie just didn't wake up. What about all that money he been paying for the last 30, 40 years?
Wasn't an
It's
accident.
Gone down the drain.
Yeah. So that's why they have more money next to God.
That's why they have more money. If you think about all the different type of insurance,
Yeah.
and all these stadiums and all these malls and all this stuff, that's financed by not banks, insurance companies. That's invisible too, right?
It's totally
okay.
invisible.
So let's talk about this bond. 'Cause
Okay.
the time go by so fast. So
All right.
understand the concept of a bond. Now, interest rates. We know that when bonds are great indicators of what's going on in the country, in the world. So let's just say you have a bond, and today, if you go put $100,000 away and you want to put it not in the stock market because we know it's elusive. You want to make sure that it's there, it's going to be there. So you go to put it in something. You don't want to put it in a CD because it's even less. You could put it in an annuity, or you can put it in a bond.
Okay.
And a bond is IOU. When you buy a bond, especially if you buy a bond from the federal government, and the federal government sell bonds from U.S. Treasuries to double Series E bonds to notes. Now, when you buy bonds from the U.S. government, you feel good because you know that it's backed by the faith. You have the faith and you have the strength of the federal government, and you know that it's not going to default.
Right.
So when you buy a U.S. Treasury bond or note, let's say they're going to pay you 2% interest for the next 10 years or next 30 years.
Okay.
You know that you're going to receive that.
No more, no less.
That's right.
Okay.
That's a guarantee.
Guaranteed.
You're getting that interest, dividend, 2% on the 100,000. You know what you know. Not a maybe, you know what you know, because who? It's Uncle Sam.
Right.
Now, believe it or not, countries all globally do the same thing in their country. Now, why would the U.S. government sell you a bond? Because the U.S. government needs money. They need money to finance the wars, to build all they need money to pay Social Security.
Right.
They need money.
Right.
So they get it from the citizens. Now, a lot of poor people don't buy bonds. Wealthy people who've already achieved something, they put their money in bonds. Like instead of putting it in a safety deposit box, they put it in the bond, and they know that the federal government, U.S., is the strongest government on the planet. Why? Also because they can print more money if they want to.
And wealthy people buy it because they're no longer, the priority isn't growing your money at
Right.
this point.
Exactly.
You've already accumulated, you already have it. It's time to preserve it.
That's right.
Okay.
That's why they wealthy. That's why they say rich people buy bonds. Or they buy CDs, or they buy annuities.
Don't come to us at 25, 30, 40 and say, I want bonds.
Right.
That's not what we're saying.
That's right. You don't understand.
You don't understand.
You don't understand.
All right.
There's other things you can do. If you don't want to be out there because you're a little child, you need to grow some money. If you don't want to do that, then there's some other
things.
products that we have
Okay.
for you that may not be as risky as stocks, but there's other things. But bonds are for, really for big money.
Okay.
Okay, so let's say for example, right now that you can buy a U.S. Treasury and the interest, the dividend is going to be 2%.
Okay.
Now, the bond market, the Federal Reserve use bonds when they want to control policy in America. If everybody has money and there's full employment, and every time you go to a restaurant and it's just, everybody just buying, they use bonds and interest rates to control the economy. if so many people have money, then the merchants are going to start rising prices on goods and services.
Absolutely. Supply demand.
Supply demand. But the Federal Reserve job is to curtail inflation. And how they do that, what they will do is increase the interest rates on a bond. So now people will start, or big money will start putting their money inside of bonds because now they can get 5% and 6% or 8% or 10%. Why would they take risk into mutual funds and stocks when they can get a guaranteed 10% by buying U.S. Treasury bonds? You follow me?
I got you.
So then when people do that, then that means as interest rates rise, the stock market do what? Go down.
Absolutely.
Now, when interest rates drop, the stock market interest rates are so low, you think people want to go and start buying bonds if they can only get 1%?
Not at all.
Or half of 1% to buy a bond? And then the stock market booming? Because every time when interest rates are low, the stock market theoretically does what? Goes up. Donald Trump needs the stock market the interest rates to be low because he's trying to do what with the stock market?
Increase it. Because it's going to make him look good and it makes the people happy because when you give the people money, they don't care what you say or what you do. I know.
Long as you show them the money.
And he actually said that.
That's right.
You may hate me, but look at your 401k.
Where's the money? It's a sort of a bribe, but the devil does that too.
Yeah.
But you
got to know the details. The devil is in the details. I mean, but some people don't care about the details. They just want to open a statement and.
Boy, if you want to move somebody, you can move them with sex, greed, and what else? Sex, greed. It was something else, wasn't it?
I got nothing.
I know sex and greed.
That's definitely it. Okay.
Sex and greed will definitely move someone, right?
Yeah. That'll get your attention.
So
that'll get your attention.
If you want to move someone and make them forget about their morals and their values,
gotcha.
You can move them with sex. You also definitely can move them with money.
American greed, absolutely.
So that's how. So if you can turn their head and make them forget about Jesus for or moral values.
Yeah.
If you make them money.
Yeah.
Because people say, listen, I was your friend, but hey, I got to get this money.
That's why people fall for scams so much. You just appeal to that greedy part.
So if interest rates are staying low, then that means that corporations can borrow, people can buy homes, people are happy, people can borrow money, people can make investments, they can do real estate, and the interest rates is low. On top of that, the federal government has debt of $22 trillion. You know what $22 trillion look like, Lynda?
I don't. I can't even.
Well, let me give you an example.
Give me an example.
The federal government is in debt of $22 trillion. That's with a T.
Okay.
Do you know how long it'll take you if I said, Lynda, here's $1, $2, $3, $4, $5, $6, $7, $8, $9,
keep it coming, $10. Keep it coming.
Okay, keep it coming, right? You know how long it'll take me to give you $1 trillion?
How long?
35,000 years.
Oh my goodness. $1 at a time.
$1, $2, $3, $4.
Okay, that's putting it in perspective.
Right. That's for me to get to $1 trillion. The federal government, America's in debt $22 trillion.
Okay.
Now, you follow me?
I got you.
Okay. Now, if interest rates are higher and the federal government owes bonds and owe China, other countries, owe on our national debt money and interest, if interest rates are higher, is that going to cost America to pay more in interest?
Absolutely.
All right. Okay. You got that? So that's the whole oxymoron. That's the whole trade-offs, for higher interest rates and lower interest rates.
Okay.
The Fed chairman Powell has a job to do. He has to maneuver. He's like a bartender. He has to make sure that if that he don't serve you too many drinks, because if you go home drunk, they may sue the bar.
Gotcha.
You follow me?
Gotcha.
He has to keep the economy moving where it's not a inflation, too much money out there, and he has to keep the economy moving where it's not a recession. A recession means that people don't have enough.
Right.
Inflation means people have too much, and you gotta break it down and make it balanced.
Absolutely.
That's what the Federal Reserve job is for policy. That's what they do when they increase interest rates or lower interest rate. And they do this with bonds and interest rates.
Gotcha.
Now, let me tell you what happened last week. If bond prices go up, in other words, let's say you bought a CD or you bought a bond today and you put in $100,000 and the going rate is 2%.
Okay.
Now, normally, then the next week, if they announce, hey, anybody this week that's want to buy a bond, we're going to give you 4%. Seems like it'll be a stampede. People are running and they're going to be buying those bonds, right?
Right.
So when interest rates go up, so then the following week they say they're going to give 6% on anybody that buy bonds. So more people will start buying bonds, and they would actually, instead of buying stock, they will buy bonds because you can get higher yield, higher interest, right?
Right.
That's how it normally works.
Right.
Okay, so let me tell you what happened last week.
Okay.
Since Powell cut interest rates, and it hadn't been cut in 10 years, the yield, the interest, the rate that you receive on bonds went down. And people still bought. In fact, the rates went down again. And people bought more. And all around in Germany and China, they're doing the same thing. They're cutting their rates because they think that they're going to be having a problem coming up. Now, if you got a 10-year bond that pays you 2%,
Right.
and all of a sudden a 2-year bond comes up and say they'll pay you 3%. The longer your maturity is on a bond, the higher your interest or your rate, your yield.
That's how it should be.
That's how it should be.
Right.
But if someone is offering a 2-year bond,
Shorter term,
a higher rate.
Higher rate. That's not how it's supposed to be.
That's not how it's supposed to be.
Right.
And when that happens, that means that fear, they know something.
Yeah. They call that an inverted curve.
That's right. They know something. So what happens, it's kind of like, imagine you in a food court in a busy shopping mall.
Okay.
And you in a big food court.
Okay.
And everybody's in there.
Okay.
And there's young people in there eating all kind of, stuff, and it's full. Can y'all imagine that, ladies and gentlemen who listen to me? Can y'all
bunch of people, hubbub, busy.
You're in the food court.
In the food court.
You've been shopping, now you're tired, you want to go in the food court, you're hungry, right?
Gotcha.
And it's full.
Right.
And all of a sudden, here come a 6-year-old, maybe a 10-year-old, walk out of the bathroom
Okay.
with a play toy AK-47.
Oh, don't say that, Robert.
Yeah.
Okay. All right. I'm going to stay with the story now.
Okay, stay with the story.
Staying with you.
Now, you don't even see, because you sit down there at the food court chopping and
I can't wait for you to tie this
and
in.
feeding your pie face,
Okay,
right?
I got you.
Right?
All right.
You ain't even see the child walk out
right.
with a play AK-47. Play.
Gotcha.
A replica.
Right.
Okay, you know how to get a play replica gun?
Look real.
Look real.
Okay.
And he's 10-year-old.
Okay.
White boy, too.
Oh, what?
Gotta be white.
Oh.
White boy. He come out of the bathroom with a play replica AK-47.
Gotcha.
Now, full court full. All of a sudden, you eating your hot dog or whatever you eating, your salad, everybody start running. Now, everybody next to you running, what you gonna do?
You gonna run.
That's right. You ain't even see what happened.
No.
You gonna run.
You're gonna run.
Bam. Now all y'all stocks, that's what the children do. That's what happened last week. $800, 800 points. Boom.
Down.
Stock.
Everybody ran.
That's right. They ran because what it looked like. Now, they said it looks like a recession is coming.
Absolutely.
So as the recession is coming, people taking their money out of the stock market, and what do? They buying the bonds. They run into safeties. Did I tie that in?
You tied it in. I wasn't sure, but that was good. You tied it in.
So it's not. So they say is a recession coming. They say 50-50. 50-50. They don't know if the boy gun was real or fake. Now, if he was a black
But
boy,
it was a herd mentality.
it was
Everybody
a herd.
ran.
That's my point.
Yeah.
And it was on a thought.
Yeah.
And it was a white boy with a gun.
Right.
Now, they ain't kill him.
No.
If he was a black boy, woo, he'd have been shot 1,000 times. We got to take a station break.
Yeah, let's do that.
We'll be right back at the station break. You listen, got a little political on that.
Oh, man.
Listen to Robert Henderson, certified financial planner, certified tax coach. I hope you guys got that. I don't know. Phone lines wide open. We got to take this station break. 305-541-2350 is the hotline to the studio here. Number 305-541-2350. If you want to call toll free, you can call 844-727-9922. 844-727-9922. Let me know if you learned something about, the characteristics of stocks and how they elusive and how they like children and bonds also. We got more to go. Keep it locked. Don't you go, stick and stay. We'll be right back after the station break. We're back live. Robert Henderson Jr., certified financial planner, certified tax coach. Joining me live here is my sister-in-law, co-host, vice president of the Henderson Financial Group, Lynda V. Harris.
Absolutely.
Lynda,
Yes,
you get
sir.
that? You think I was too hard?
I got it. And like the engineer said, this is real life examples of little Johnny walking out with the play AK. But hey, this is a world we live in and to tie it in like that, I think they got it. Unless we opened up the phone lines to see if they call, but I think they got it, Rob. I think they got it.
Yeah. We got a caller? All right, let's get this caller. Caller, you on line one. You got a question or comment?
Hey, Robert. Yeah, this is Lynda Holloway. I do have a question about the bonds that you shared.
Okay.
I've learned so much.
Thank you.
All right, let's get this call.
Okay, you got to turn your radio down a little bit in the back, and
Okay.
because it's echoing, and then I'm ready for your question.
Okay. Turning it down. Shared. Okay. Learned so much. Thank you.
I still hear it in the background.
Okay, I'm moving away from there. Okay, can you hear?
Yes,
Gotcha.
we
Okay.
ready for you.
I've had bonds for years when I was employed 30 some odd years ago, and I still have some in my possession, but I need to know what do I need to do in order to benefit? Or I know you said bonds don't grow your money. Is that correct? Is that a correct statement?
Right. Correct.
All right. What do I do about these bonds that I've had for, as I said, more than 30 years?
Oh well, you should. Well, you can take them right there to your bank or commercial bank, or you can take them to the Federal Reserve right off 36th Street, and they'll cash them in for you.
Okay.
That's good, right?
Thank you. And excellent. I appreciate that. And I have learned so much just by listening to you explain stocks, bonds, and the analogies and the metaphors for the analogies that you use, the visuals. I really appreciate your
Thank you very much.
Both you and Lynda. You're
Thank
doing
you.
an excellent job. Thank you.
We got to go. Love you. Thank you. Thank you for calling.
Very much.
So really now what Trump's trying, matter of fact, when that happened and everybody left the cafeteria, the food court, and the stocks dropped, Donald Trump called 3 major banks in Wall Street to say, hey, y'all got to do something about this, I'm trying to get reelected, basically.
Right.
So now, yesterday, the stock market went up 300 points. In other words, people are returning to the food court.
Yeah.
They know that was a scare.
Right.
It wasn't really true.
Right.
You follow me?
Right.
But some analysts saying, hey, it could be. You never know.
Right.
It's 50-50 because it's, you don't really know.
Right.
But
shame on them for that tactic and scaring people. And for people that are in the market that's growing their money, hopefully our clients didn't take the bait.
Well,
we've educated our clients
Right.
and they didn't take the bait because that's the nature of the beast. But just if you're in it, you're in it for the long term.
Yeah, we got to wrap it up. I'm
All
getting
right,
a signal
all right.
from the engineers. Time to go. I hope y'all learned something. We got more to go. Next week, we're going to talk about reverse mortgages. I had promised to talk about that, but I'm going to break it down to you like a 6-year-old.
Will we be on camera?
Yeah.
So I can get a makeup artist?
Yeah,
and
get
all
your
that?
makeup artist
Okay,
for
thank you
YouTube.
very
Hey,
much.
listen, if y'all want to see this again, Isaac is going to upload this week, this show here on YouTube, so you can catch it in its entirety, all right? And you can always go to www.thehendersonfinancialgroup.com and listen to all our past podcast radio shows. And go to YouTube. We got a YouTube channel now just called Understanding Money, Robert Henderson. Have a great weekend.
Have a great one.